Hey everybody, welcome to Trading the Close. My name is Gareth Soloway and I'm here with verifiedinvesting.com to go over the technical angle in the market. So we're going to talk crypto, we're going to talk stocks, commodities out there, what a fall on gold, and also taking a look at the S&P 500, the Russell 2000, which briefly made a new all-time high since 2021. That was the last time it was this high. So pretty remarkable stuff in the markets. We also saw a fade in the markets, which is interesting because really the markets had this kind of grinding move to the upside in early trading and then kind of gave back a lot of those gains. All right, let's walk over here, folks, and take a look at what the markets are doing. All right, so what are we looking at here? We have the Dow up 400 points. That's a great move on the Dow. The Dow, again, I was doing comparisons, and I looked back at a 15-year span. Now, why did I choose 15 years? I chose 15 years because it was from the 2009 bottom to the current high. So we're talking 15-year span, and the Dow right now is up about 585 to 590 percent. All right, so huge, almost 600%. I looked back historically at the last time that we saw a 15-year span where the Dow gained about 600%. There were only two times in history. One was the lead up from the 87 crash to the 1999-2000 top in the market, where markets gained over 600% on the Dow, and the time before that was right after World War I to the 1929 high before the Great Depression. Just kind of weird and eerie when you start to see some of these stats out there. All right, the S&P, or I should say the NASDAQ, up about 0.2%, so just a small gain on the NASDAQ, and the S&P, same thing, up about 0.27%, so gaining a small amount. Now, these numbers were much, much higher early in the day, but the markets did see some early selling and then basically sideways chop into the end of the day. Oil today down $2, so a nice pullback on oil. Gold, massive drop, almost $90 drop in gold. Remember, I told you I went long on gold miners. We unloaded the GDX on Friday on this pop into resistance. I gave you guys that midpoint dotted line. We'll look at that in just a second, and then look at what happens. The technicals come through once again. Bitcoin today getting hammered to the downside, down 3.4%. Again, why is it doing this? My guess is this, and I'm going to throw this out to you guys, is that Bitcoin was just knocking on the door of 100,000 for multiple days. In fact, if you go last week, I said that, hey, if we have not broken 100,000 by Monday, look for a potential pullback. Now, I still think it's going to go through 100,000, but my guess is you had a lot of smaller investors that were loading the boat at 99,000, thinking it was easy money to push through and make some, easy change on Bitcoin. And the markets have a tendency to want to flush those weak hands out. So by bringing it down, let's say to 94,000, maybe 92, 90,000, they'll flush out those weak hands, get them to exit their positions, then run it up, pierce 100,000, and you know what's going to happen at that point. All those people that exited at 90, they'll jump back on board when it breaks 100,000, thinking it's going to the moon. And then that's the question, is do we put in a bigger market top when we get to about 107,000? That's my upside target. I'll show you where I get that from. All right, let's go to the charts here. Here's the S&P 500. And again, I wanted to show you this chart because very, very key. Look at the high of the day. So we had this wedge pattern, right? Here was your high pivot. We broke down right here. This is where the initial breakdown occurred, retraced to the scene of the crime, pull back, and then look at where we topped out today. The high of the day, briefly piercing the high, that's called a double top. It then backed off and pulled back to close the day just slightly below. Now remember, I still have my overall target on the S&P, 6,000 to 6,100. Now we've already achieved this target. Now the question is, do they have enough energy to potentially push us up to these two lines again before a bigger rollover? But there are signs out there. I was looking at the chart of Netflix today. We'll look at that in just a second. There are some big reversal candles being put in on the market on some of these high flyers that have to be taken into account. All right. Let's go back to the screen here and go through a couple other charts. The next one I wanted to show you guys is the NASDAQ 100. And right here, we did fill this gap, so this gap has now been filled. Notice we're still inside of what we would refer to as a wedge pattern. Does this go up here? Does it break above? Or do we break to the downside? Now, one indicator could be what NVIDIA is doing. NVIDIA here is now, or has now confirmed a break of this upsloping trend line with a short-term target of between 130 and 132. But the mere fact that NVIDIA is starting to break lower, that is going to make it very, very hard for the markets to really get strength. So you have to have, remember, when a $3.5 trillion company has a big drop like today, down over 4%, it needs those other mega cap tech stocks to be able to conjointly negate that drop in the overall NVIDIA stock. And that's the question. I mean, today we saw it. If that continues, though, how much longer can those other stocks outperform and negate the drop on NVIDIA? And remember, NVIDIA has been the market. Once that goes, it oftentimes is a warning sign that the markets could be ready to correct just a little bit. Now, one of the things we want to talk about here is the Russell 2000. This is a great chart here, guys. So if we zoom out on this, look at this. Here's your double top. We can take out this other trend line here for the time being. This was your high from 2021. All right, so that was your high. It was your all-time high. It had never been broken since 2021, even though the S&P and the NASDAQ have both made many, many new all-time highs this year. Today, look at what happened. We went up. We pierced it, there's your double top hit, and it got rejected. That's very, very standard. All right, now the other thing I want to just show you guys, and I'm going to go over the big board to kind of show this to you, is a great example of what happens in charts. And this is one of my favorite setups on a technical basis. So you had this high here, right? This is going back to July of 2024. Here's your high, pulls back, kind of chops, kisses it here, hits it here. So we have a very clear trend line to go for. Now here, you closed here, you gapped up, essentially you broke out. Here's your confirming candle right here, so it's now a confirmed breakout. Now most investors, they would buy this. I don't chase breakouts, right, or breakdowns as a matter of fact. What I do is I use the discipline that I've learned from years and years of trading to rebuy back at the scene of the crime. You hear me use that term all the time, the scene of the crime. So essentially what you're getting here, and this happens almost in, I would say 80% of the time, you have this line, you break out, you don't want to chase it, instead be patient, and you'll get a chance to get in, and then look at that move up right to double top. There it is. Now the question is, does the Russell 2000 break above this high? It may. I wouldn't be surprised. In fact, I'm favoring that eventually it does, but it might have a day or two of a pullback or a pause of consolidation. But that's a great chart, great example of a retrace to the scene of the crime. Now today we saw the yields dropping severely. Look at this, down 0.14 points on the 10-year, back to 4.26. The key catalyst here, guys, is that, again, Scott Bessent, who basically was nominated by Trump to be the Treasury Secretary, he's like an old school boy from Wall Street, hedge fund manager. So, again, the markets were getting very nervous about, the crazy, maybe, out of the box policies of Trump. This was reassuring to Wall Street that he's going to stick with what has worked in the past with Wall Street. Whether that's good or bad, we don't know yet. But ultimately, again, this wasn't a rocking the apple cart type scenario, right? And that's again why the yields are pulling back today. The dollar fell as well. And it's also honestly also why gold fell so sharply today as well. If we look at gold here, look at this drop. Again, there was your dotted line. We actually pierced it on Friday. But again, I showed you guys here support, here resistance, then kind of went up. Here's your high pivot right along that dotted line. Here was your low where I called the long, and look at that move up, and then look at the drop. Now, one of the things to keep an eye on here is, has the angle, and let's go to the big board and discuss this on gold, has the angle of gold gone from an uptrend to a short-term downtrend? The answer is yes, it has. So I expect lower lows on gold in the near term. I'm still very bullish over the next 6, 12, 18 months, but in the short term, I'm going to show you why. So number one, when you were going up, were the candles here, the candlesticks, were they the big ones, the big candlesticks green, or were they red? And if you look here, in general, nice size here, here, smaller red here, really small, 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 green, green, big green, big green, big green, big green, with small little reds. All right, that is a signal telling you that the trend is strong. The green candles are bigger. All right, in addition, you can see very clearly, here is a high, or here's a high, higher high, higher high, low, higher low, higher low. So lower, higher highs and higher lows on the uptrend. But look at what's happened here. All of a sudden, look at the size of the reds. Big, right? Those are telling you something is going on here. In addition, if we erase that, now look at the highs and lows. You have a high, higher high, lower high. Now you have a lower high. Low, lower low. You have a change in direction. Okay, so gold again now has angled towards the downside, which makes sense also because, again, people just got too bullish up here. Remember, markets like to kind of get the majority in, and then they want to flush them out, vice versa on the downside, get everyone freaking out, and then they take it back up. But those are little signals that tell us that gold is likely going to go lower. Where do I think it's going? I'm guessing we're going to retest 2,500 or just below 2,500. I will be a buyer at key levels, and I'll keep you guys updated. All right, a couple other charts to just quickly go over here. Here was your Netflix chart. I just wanted to show this. This is a nasty red candle today on Netflix. Really, really overbought. Obviously, the run-up after the Tyson-Paul fight, and then you can see the big reversal engulfing candle right here. That is a very bearish indicator. And then if we go to Bitcoin here, let's take a look at this. I want to show you guys this. This is pretty cool stuff. So if we look at this, Bitcoin is trading right now around just under 95,000. Like I said, they're trying to wipe out the weak hands. I still think it probably breaks 100,000. But if we go to our weekly chart here, and I'm going to get rid of these other lines because I think it just keeps it simpler for us. If we zoom out on this, this is where I get my target from now of 107. And again, it makes sense because it kissed 100. Didn't break. When it does break 100, you'll get a lot of new money flow coming in now. You'll get people that are stopping out now, that are exiting, and they'll push it up. But look at what we have here. I was doing research over the weekend because I'm always looking at charts, and we have our 2017 high right here, right? So that's your 2017 high. Here's your first high in 2021. Right? Second high in 2021, right there, right here and here. You put a trend line there and you drop a parallel down. Now, the reason why you drop a parallel down is because you want to see if the trend line has teeth. How do you know it has teeth? If it aligns with key lows, and here it does. So that gives you credence solidifying that it's a big level. You stretch that trend line out. You go right up there, and that's right at 107,000, maybe 108, right in that vicinity. It's an upsloping trend line, so it'll increase ever so slightly every single day. But that, if I'm correct, and I could be off, obviously, but that would be a major resistance per technical analysis on Bitcoin. So I would, in general, I don't know if we're going to pull back to 90 or just 93 or whatnot, but I would expect, again, eventually that next leg up takes you and pierces 100. We run to maybe 107, gets everyone thinking it's going to 120 to 150, and then the rug pull comes, at least in the short term. I still believe in Bitcoin longer term quite a bit. All right, lastly, quickly taking a look here at the oil chart, just going over oil today. We'll look at silver real quick too. Oil again, folks, if we go to our daily chart, nice down move, still stuck above support at 65, still below resistance at 75 right here. And then if we go to our silver chart real quick, because I know a lot of you guys love the silver, look at how it reacted, right? Pivot low, pivot low, pivot low, breakdown. Here's your confirming candle right here. This confirms a break, which solidifies this as major resistance. Notice how price goes into it, rejected, hammers again, rejected because it's major and it's confirmed. I still think silver's going down, honestly, maybe as low as $28 per ounce. And lastly, natural gas, guys. For those of you that didn't tune into the game plan, I unloaded my longs, my shorts on natural gas on Friday. I gave you guys this level. We unloaded down here. Today, right back up. It actually retested those highs. It just shows you how important it is to take profits, especially when they're given that quickly in a trade. You grab it, you say thank you very much, and you move on to the next trade. All right, guys, that's all from me today here from Verified Investing. I love the comments, love the kind words. Thank you so much from all of us here at Verified Investing. We're really trying to make it so that you guys have another level to rely on in terms of technical and data analysis versus all the hype in social media and the narratives in the mainstream media. So thank you so much. Have a great rest of your day. See you tomorrow. Take care.